Welcome back to Market on Close. It's time for Options Corner. That means Kevin Green is here, senior markets correspondent on the network. Kevin, welcome. We have, 17 minutes to go before the close. You kind of take a look at the inner workings of everything. What is the open interest telling you right now? What are you seeing on that front?
Well, from an open interest standpoint, I mean, the levels for the most part have held. I mean, if you're looking at the negative gamma, at least for today's level, it's going to be 56.90 is going to be the key area for us to be able to hold. Now, what I will say is that at around 3:30, I'm sorry, Eastern time, we actually did see a significant amount of calls being sold in the market here, Caroline, and that's just kind of the unwinding of the placement that we've seen earlier in today's session. Now, usually that's going to be a little bit more of a bearish activity because market makers could then unwind some of their market makers can then be able to unwind their positions, but we are actually holding up here fairly well. And I don't know. I mean, when you're looking at the options flow over the last 30 minutes, I would say that we probably will either have a pretty decent breakout to the upside and or breakdown to the downside here. So I'm looking at 57.02 as your balance area. Basically, dealers are going to be net neutral at that level. Hopefully, we're going to be able to hold 5,700. But I mean, it could be in the realm of possibility of trying to test that 57.20 or even trying to go higher, just because even though we did see that bearish flow, the market itself, as far as the equity market, has been able to hold up for now.
All right, so could see some volatility heading into the close. What about in terms of volumes? What are you seeing?
Yeah, from a volume standpoint, I mean, we have seen activity at the 57.20 level all morning. Now, that was actually a significant area where we saw a lot of call selling to start the day, which is traditionally what institutional traders will do in order to collar their positions. But we started getting some bullish activity after that initial flush to the downside this morning, and it's been able to hold. But as I kind of talked about, we are seeing maybe some of those individuals trying to sell out of those positions. And when we started testing that 5,700 level again, the recent bounce there, we actually did see some bearish flows coming into the market. But for the most part, it has been compressed. We have been able to try to at least maintain for now, especially after a day like yesterday. So this isn't a booming recovery, but this is a win for the bulls to say they may have been able to stop the bleeding for now, as we still get some more economic data over the next 2 days regarding labor that could actually sway the market's enthusiasm even more to the upside here. I mean, you're trying to really find an area where it's going to be very conducive for the Fed's rate policy, and I think the market's just trying to navigate that right now.
Yeah, can't necessarily read too much into one day's move, but given the move lower that we saw yesterday and then how the open looked today and losses were kind of picking up steam, if this market ends up pulling out a close, I mean, the Russell is lower right now, but barely. If we do end up seeing green arrows across the screen here, is that a bullish signal?
Yeah, I would say so. I mean, if you're kind of looking at the market action today, usually when we do have these nice, green days, we have initially a flush in the market, and then we start seeing buyers kind of step back in. Now, we came back and retested that 5,700 level almost actually 2 times before trying to move higher. And this is where we're seeing the area of resistance pretty much at around 57.15. Once again, 57.20 is going to be that area of resistance. But if you're able to break through that, we don't have a lot of time left, but if you're able to break through 57.25, that could actually create this gap up type of reaction in the market, barring we don't have just a massive amount of unwinding taking place in the next 10 minutes or so, kind of like we saw once again at around 3:30 Eastern time here. So I think it would be a win. You're looking at the last 2 data sets. Initial claims over the last couple of weeks have been really, really good compared to the street's expectations. And the job report should be a clean report, to say the least, if it's going to match the trends that we've seen in initial claims as well as continuing claims. So if those 2 things do align, I think it still gives bulls a little bit more confidence that they can actually try to follow through here as we prepare for earnings season, pretty much starting on Friday of next week. And so I think earnings definitely gives us a little bit more of a leg up rather than maybe some of the macroeconomic data that might be a little bit mixed when it comes to the outlook for the economy.
Yeah, a lot more catalysts there, hopefully. Kevin, just want to give you a quick chance to talk about liquidity as well.
Yeah, we actually did see a pretty decent drop in liquidity yesterday and even in today's session. And so that's not surprising when you have down days like this. One thing I will kind of note, though, it's about 50% of what we actually saw on Friday of last week. Now, usually on Fridays, you do see a significant amount of volume. So it does kind of make sense. Maybe it's tampered down, but you do not want to see this trend kind of continue. The aggressive contraction in liquidity could create for volatile markets, just like we are seeing today. And if that's going to continue, that gives bears actually a little bit more confidence that they might be able to knock this market down, given some economic data could actually align with that.
All right, Kevin Green, thanks so much.